Small cap companies listed on the Bursa Malaysia with market capitalization of 3 to 500 million ringgit are safe haven for investor because these companies are shielded and not really exposed to the effect of the financial crisis. OSK Research Senior Vice President Jeffrey Tan said smaller capital companies are mostly domestic-centric and the smaller capitalized companies generally still have room for business growth.
If you look at the earnings performance of some of these companies, they are very, very steady, and the sort of investors that look for safer haven stocks would of course choose this sort of companies. Like Chris has mentioned, the risk-reward ratio of course would favor, would depend on the companies or even the institutional investors per se. But if you look at the dividend yields as well, some of these companies have consistently paid good dividend yields of above 5%. In terms of capital preservation, since they've been derated because of the market, but they're still paying that sort of yields. So I think investors are really comfortable in these shares or in the holdings they have in these companies.
Speaking to reporters after the launch of OSK Top Malaysian Small Cap Book 50 Jewels today, Tan said although smaller cap companies may face difficulties in trading due to its limited liquidity, the problem should improve when the market recovers.
Compare with the bigger caps, liquidity remains an issue, but over time I think the management of these companies would of course try ways to actually improve their liquidity. We've seen a lot of these companies doing a lot of placement exercises, doing their own corporate restructuring and all that, so liquidity remains a key issue that we always raise with the management people, and they will of course take this up within their boards, and I think they do understand what the predicament is among investors, even retailers and even institutions. So for companies that prefer to be or wish to be more institutionalized in the longer term, I think they will know what to do. Liquidity should improve over time when the market recovers.
According to him, the market is expected to make a comeback towards the tail end of the result reporting season in May, and that it is a good time to buy into small cap stocks now.
If you look at the small caps, the second liners and the third liners, the interests have definitely come back over the last 2 weeks or so. And valuations for the big caps have of course come back up. There's been considerable interest over the last 3 months, so people are now moving towards the second and third liners. So it's good time to reposition for the small cap stocks that are included within the 50 companies. Now, I think our house view is that the market will probably come back up further towards the tail end of the May reporting season. As you know, over the next couple of weeks, a lot of the companies will be announcing their results. We tend to think that this will be perhaps the bottom that we can see in terms of the earnings disappointments.
The top 10 stocks listed in OSK's Top Malaysian Small Cap Book are Ala Maritime Resources, Hi-O Enterprise, Hector Real Estate Investment Trust, Kosan Rubber Industries, KPJ Healthcare, Malaysia Steel Works, Mudajaya Group, New Hong Fat, QL Resources, and Wasyong Corp. Among stocks that are expected to see profit growth this year are those from the oil and gas, construction, media, consumer and food industries.